When it comes to using moving averages, which numbers are the best? I think many times we are told that like we should be using 50 and 200 simply because we are told that, oh, these are the ones that the market pays the most attention to. So why the 50? Why the 200? Why are these numbers so special? Well, I don't know. I have no clue. Do you know? Let me know in the comments if you know. I would really love to find out. Let's break it down. If we were to use a 50 period moving average on a daily chart, what we're looking at is the average price for the last 50 days. Now we know that the US markets are open for like 5 days a week, and that corresponds to about 20 working days or market open days in every month. So what is 50 days then? Is that 1 month? Is it 2 months? Is it even 3 months? No, I mean, it kind of looks more like 2.5 months to me. So what is 2.5 months to the market? I don't know, that kind of seems like a rather odd length of time, 2.5 months. So maybe it's not months, maybe it's weeks. Let's take a look at if it's weeks. So 5 working days per week, 50 days moving average, that would correspond to about 10 weeks of information. But when it comes to the market, what is 10 weeks? It still seems like a very odd duration of time. So likewise, let's think about the 200 period moving average. What is 200 days? That corresponds to about 40 weeks, which is around 10 months. What does 10 months represent in the market? Now, last I checked, there should be 12 months in 1 year, not 10. I don't know about you, but the 50 and the 200 period moving averages doesn't seem to give me anything meaningful. But I'm sure someone might say, yeah, but the whole market is looking at these two numbers. It's the industry standard. Well, I would argue that just because everybody is doing something doesn't necessarily make it right. Now, if you personally know any professional institutional trader, that means trading for a hedge fund or trading for a bank, investment bank, why don't you go ask them now if they are using moving average crossover strategies in their investing or in their trading? Go ask them. Go ask them now. Personally, I use moving averages to give me an indication of the trends so that I can better plan how am I going to enter into my positions and manage them moving forward. For me personally, I prefer to use indicators that actually tell me something meaningful. And what numbers do I personally find meaningful? Well, instead of the 50 period moving average, I prefer to use the 60 period because that corresponds to 60 days of information, which is roughly around 3 months or 1 quarter. So the average price I'm seeing is the average price for the previous quarter that precedes the current price today. And instead of the 200 period moving average, I prefer to use the 240 period moving average, corresponding to about 240 days, which is roughly around the number of days that the market is open within the year. Therefore, the 240 moving average gives me the average price for the past 1 year. Now, if I'm going to use a tool or an indicator to give me information or help me to interpret data, then it's better be something meaningful and something useful. If not, there's really no point in using it. And just because everybody is looking at one particular thing doesn't mean I have to. Doesn't mean that it's going to be meaningful or useful to me. Once again, I don't and I would never recommend anyone to simply use moving average as a tool to generate buy or sell signals. Alright, so that's it for today's video. Like, comment, subscribe if you found it to be helpful, and I'll see you in the next one.